Good morning, everybody. It's the 14th of January. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare for the final time this week. How you doing, Steve?
Hey, and I'm off on a 2-week holiday.
Oh, God, yeah.
Going to travel to Australia. I'm going to because they've just given me a call saying, "Do you want to take part?" Because Djokovic has been booted out.
Yep.
And I'm just, I've,
And you're going to run
I
some
ha-
inquiries, are you, in the UK government as well?
yeah, I could do that. I saw a nice picture of Boris with his Cobra beer,
Yep.
saying that he thought it was a Cobra meeting. So that was quite sort of like, I can understand it now. I can understand where he's coming from now. So that's put my mind at rest, and I'm
And
sure
then,
his best friend doing the inquiry will probably see the same picture that I saw. So we should be all right, Joe. I think Boris will escape it.
yeah. Fucking hell.
I don't know how. I
Let's
mean,
see.
Jesus, what is the world coming to? The world has gone mad, and we are just seeing it go mad in front of our own eyes. Incredible.
Yeah. What's the least surprising madness or moment of madness? Granit Xhaka getting sent off last night in the football match.
Yeah, I mean, it's sort of like I watched the match. I think, pretty disappointed with both attacking parts to both teams. Obviously, Liverpool
Well, we went
missing.
full defensive mode after the man got sent
Y-
off.
Yeah, but you still had them opportunities, didn't you? And it
Yeah.
just there was just that sort of like what you need is a level-headed striker like Salah or I wouldn't class Mane as that, but Salah really just as sort of someone who you sort of like know you can go to and he'll get a few on target. But I don't think Ramsey was tested at all, was he? Not Ramsey,
Ramsdale. No,
Ramsdale.
he had a pretty poor game actually. He flapped it quite a lot and didn't look
Yeah.
particularly confident yesterday, I didn't think.
No, I mean, got charged down by Henderson, but I mean that would have been a handball, I think,
Yeah,
if they'd have,
definitely.
but they got a corner out of it, and it's something anything could have happened from that corner. So it just shows you it's. But then Arsenal still had a few chances. I
Yeah,
mean, Liverpool's keeper Alisson made a great save for one of
he
them.
did from the spread save from
Yeah,
Saka, was it?
yeah, and it just shows you that it's sort of like even with 10 players, these teams are sort of like proper athletes, and they can
Yeah.
sort of compete. Yeah, so it was
Let's hope
very
they get enough
frustrating.
rest before the North London derby for Arsenal on
Yeah,
Sunday.
well, apparently Tottenham get battered everywhere they go. So I've
That's
heard.
what I keep hearing.
Yeah, I keep hearing that as well. Every time you switch on a football match, everyone seems to know that. So
Yeah.
yeah,
Okay.
fun.
Well,
Anyway, the market.
yeah, fairly informal start for us on a Friday. Obviously, Steve, you'll be off on. It sounds like you was in full holiday mode there, actually, the way you were talking, which
Yeah.
is, yeah, good for you, mate. Okay, so what's going on in the markets? We had a tech sell-off yesterday that resumed after a raft of Federal Reserve officials signalled their intention to combat inflation aggressively. Brainard, one of the speakers in the US, said that the US central bank could raise interest rates as early as March. Christopher Waller said that 3 interest rate rises this year was a good baseline, but there may be fewer or even as many as 5 moves, according to some others. So clearly that's put a bit of pressure on markets yesterday, particularly in the tech sector. With regards to what's going on with Boris Johnson, his government will not face a police inquiry into alleged pandemic rule breaking unless an ongoing probe by senior civil servants turn up enough evidence for criminal behaviour. Another way of angering the British public by the looks of things. More revelations yesterday that there was more parties. One, in fact, the evening before the Prince Philip funeral, where there's the sad image of the Queen all by herself sitting at the funeral. So, that will anger a lot of people for sure. Okay, we are going to get stuck straight into the charts because there's not much else to sort of go by. So, Steve, what do you want to start with today?
Yeah, I'll focus on the US indices. Let me add my.
Sorry, mate.
Sorry about that. I'll obviously focus on Nasdaq because it was my gun-to-head trade idea yesterday. We've got this support line coming in at 15,500. We're trading around there now, and we saw the big breakdown. Got down to this week. We've been down to 15,161, and we have rallied back, but then the sell-off put us back under pressure again. So we're hanging around at 15,500 levels. So really decision time. It seems to be stalling ever so slightly. Really needs to break below 15,430 to continue this sell-off. But you can see from the gun-to-head trade yesterday, quite pleased with that. It closed out at 9 o'clock, around about there. So decent R. Joel, fill us in with what it is. On the other indices, looking at the Dow, bearish outside candle yesterday, so negative for the market. It really needs to get below the 36,000 level. That's when things get interesting. We've seen a couple of dips below that this week, and they've recovered quite nicely. So are we posting just lower, higher lows, and maybe we're just going to continue higher? It's, you know, I wouldn't bet against anything. Same sort of thing in the S&P. We've had the daily Ichimoku cloud supporting price action, got that bearish engulfing candle yesterday, almost like an evening star formation forming. So really confirmed by yesterday's price action. So that's looking likely to retest this cloud and potentially retest this swing low, which comes in at 4,580. On the FTSE side of things, off to a positive start today, really. Again, another sort of like multi-year high. It's performing pretty well back on the back of the commodity and the banking influence in the FTSE. The Dow, bearish outside candle yesterday again. That sort of typical evening doji star formation. Further downside, really expecting that. It seems to be hanging on to this 15,900 level at the moment. But I think we should have a little bit of a flirt down before the US come in this afternoon. China 50, I better highlight this one because this is the one I keep harping on about. Doesn't look pretty good at all. We've taken out the low of the week of 8th of November. That was at 15,104, just trading around 15,000, just above there now. 14,500 is the level to watch for me, but we're getting this crossover in the MACD, so watch out for the China 50. Looks pretty negative. On the Bitcoin side of things, price action was poor again yesterday. Bearish outside candle, so the negative sentiment. A little bit of indecision today. It really needs to get down below 42,350 to open up a return to a retest of possibly this upward trending support line coming in at 40,680. Ethereum, it's a bearish day, maybe an inside harami rather than an engulfing candle. So that's holding on to a little bit of positivity. 3,200, the level to watch there. Really needs to break back above 3,400 to open up the upside. Ripple trading around 77 cents, and Cardano has pulled itself back above that upward trending support line. So finishing the week on a more positive note than it did last week. It broke that trend line and it's finishing higher. Has been up to 135, but trading around 127 now. So not too bad. Commodities. The oil, we're in this corrective phase. We've had a really positive week this week. Price action yesterday was negative, bit of a bearish dark cloud, but off to a decent start this morning. Needs to clear the resistance at 82.40, but then I'm sure we'll see some more above that at 83.60, and obviously $85 is not far away for WTI crude oil. The high in Brent crude oil is 85.78. So you're looking at similar types of levels, although there's a $2.60 deficit. What's it called? Premium discount that WTI is trading at. If we go back to October 21. We got very similar sort of highs, so I'll be interested to see how this performs here. Brent is definitely on the front foot, more so this morning. It's taken out that high from the 12th of Jan, whereas WTI hasn't quite done it yet. And finally, gold. 1834 is the level to watch. We pushed high yesterday, but we are getting these hanging man candles. So for me, this might be a good gun to head trade to finish the week. A little bit of, although you're sort of selling into it, it looks like we could be posting a lower high. So maybe getting short here with a tight stop above that 1834 level may give you an opportunity on the downside. Although it feels like on a Friday, we may not have enough time to see that play out. It may take a few more days to come back and retest the support.
Nice.
That's it, Joe.
All right, lovely. Okay, let's have a quick look at FX then. So dollar index still in corrective mode. We've seen a breakout of this channel as we spoke about yesterday. Big impulsive move to the downside on the back of the FOMC chat around rising interest rates and obviously tapering. We've seen the pullback reach this first level of support, which is this big blue line that we've got here. This is a previous swing high from the 25th of September. So quite an interesting level. Below that got 38.2% fib level at 94.47. Seems to be doing the job of holding at the moment. We are weaker today, but off of the worst levels of the session. So remains to be seen whether or not this will act as a support level. I'm quite interested in it at this kind of level. I think from a risk reward perspective, I think buying here would be not a terrible idea, but obviously it is a Friday and there's plenty going on in the markets at the minute. So as always with trades, there is risk associated with it, but I like the fact that it's into this support zone and I think there could be maybe an opportunity there. If we look at euro US dollar, that continued to move high, although it did close yesterday off of its best levels of the session. We did close above this downtrend line that you can see here, and we are posting higher prices again today, but seem to be stalling just in front of this 115.25 level on the upside. So maybe we will see a little bit of a pullback to retest this previous breakout level at around 113.85. So I wouldn't be buying into that. I think there's limited upside potential towards that blue line. And from a risk reward perspective, there doesn't really seem to be much appeal for me at the moment in either direction, to be totally honest. So looking at Aussie US dollar, that's rallied to this resistance level here at 172.75. We did close above it on the 12th of January, but we posted quite a decent looking reversal yesterday, actually. A bit of a shooting star candle there, as you can see. We posted highs up to this kind of level at 73.10, but closed actually lower on the session and backing that up today with further indecision. So potential for a little bit of a retreat there, maybe in the very short term. If I am going to buy US dollar, then I'd probably be looking to pair it against some of the commodity currencies like Aussie or New Zealand dollar, because obviously they have riskier connotations associated with them, linked to commodities, etc. So if we are to see strength in the dollar index and maybe a risk off kind of approach to markets, then I'd be looking maybe shorting Aussie and New Zealand dollar versus the US dollar. Looking at New Zealand dollar, this was quite interesting on the daily. We've obviously seen a decent punch to the upside, but again, a bit of a reversal yesterday. I was eyeing up this previous low here actually from September time as acting as a bit of resistance. If you look back since the breakdown below that support level back in November, we have seen a number of retests of that level which have all failed. We haven't seen a close above that level at the moment, so there is potential for me for that to reverse and for a move back down to those lows. From a risk reward perspective there, this might be when I do actually on the gun to the head side of things. If you're selling into this resistance here with a stop above those highs that we posted yesterday, targeting a move back to those lows, you've got about 4-to-1 risk reward on that one. So I really do like the looks of that actually. One thing that put me off slightly was when I looked at the weekly chart, and as you can see here, this has had a really nice move higher. We've seen a reasonable pullback from this move here to the 38.2% fib level, which is doing a job. And also if we zoom in on how this candle looks on a weekly basis, you could argue that's a bit of an engulfing candle. So yeah, mixed bag on that, but I do kind of like that intraday opportunity there based on the fact that I am still bullish of dollar index and the level that that's at the moment. Quickly on cable, this is how it looks on the weekly chart. Just to put it into context, obviously we've seen this big break of the channel on that one, so invalidating that kind of theory that I thought it would get to the upper end and move lower. So that looks to be actually quite bullish. So the outlook therefore favours further upside in sterling versus the US dollar in the near term. And as you can see here on the daily chart, we've got that break of trend. We've got some resistance levels up here to target, so still a little bit for that to do potentially on the upside. However, I would caution that this has obviously been a very sharp move higher without really any sort of retracement. So these moves are often unsustainable. They can go on and on for a while, but just bear that in mind that it's at a really sharp move higher. Just going to wrap up on Euro Sterling. Still continues to trade below this broken channel. We've seen a retest to the underside of it yesterday and a failure. Still looking for a move lower towards this 82.75. That'll do on the FX front for the day.
Nice one, Joe. I've got to shoot. The plane's waiting on the tarmac. I'll just finish off with this gun to head quickly, but So I'm going with the gold trade idea, really. Just thinking about this 1834 level, getting short here, 1824.45, stop at 1834.45, targeting 1799.45. That 1800 level for me is the one to watch. So I've clicked that and posted it in the thing. That's the one I sort of like felt a little bit of the one to go for today.
All right.
All the others are
cool.
a bit mid-range. All right.
Sorry, go on, Steve. Have a fantastic couple of weeks off.
Cheers, mate.
A good weekend, and I'll catch up with you soon.
Cheers, Joe. Cheers.
Bye.
Bye.
Okay, just to wrap up the guns and head trades from yesterday, Steve mentioned that he went short of Nasdaq and did really well on that. 366 ticks or 2.44R yesterday, which obviously offset the loss I had on Bitcoin, which didn't do anything at all and slipped a little bit lower. So decent day on the gun to the head trades from yesterday, and obviously Steve has left us there with a short gold trade being his idea for today. I've already kind of given an indication about where I want to go with my one, and that's on New Zealand dollar versus the US dollar. This is the daily chart. We've rallied into a decent level here. Previous swing lows from September. We saw a breakdown below that level and a number of retests, which have so far repelled any upside advances. So I'm going to sell that today. I'm just going to go to the hourly chart just to refine that entry a little. So we are currently trading at 86.60. I'm going to sell it there with a stop loss above these highs here that we posted earlier this morning or yesterday afternoon. So 31 tick stop at 68.92, targeting a move all the way back down to these lows at 67.34. So looking for just a tad over 4-to-1 risk reward on that one today. In terms of data to watch out for the session ahead, we've got US retail sales due out at 1:30 this afternoon UK time. Sales expected to rise 0.3% month on month, and then at 3 p.m. we have the fairly big data point due out from the US, which is the US consumer confidence figure for January. The index is expected to hold at 70.6. So obviously at the moment we have ongoing discussions with regards to what's going to happen with interest rates. We're also fast approaching the latest round of earnings from US corporates, and today we start off with JP Morgan and also Citigroup. So some big banks will be reporting numbers today. Obviously, in a higher interest rate environment, you expect banks to do quite well. And now we're going to start moving on that cycle of raising interest rates. We may see some pretty good guidance from some of these banks, but unfortunately that isn't helping the tech sector, because obviously if interest rates are higher, there is less risk in keeping your money in the bank and you're going to get fed a reasonable interest rate. So there is going to become a bit of a balancing act here between, do investors keep money in lower risk assets and take the lower interest rate on offer with no risk, or do they still go out hunting these bigger gains on things like tech stocks? So we are poised for an interesting few months, that's for sure. We're going to wrap it up now for the day and for the week. Hopefully you've had a good week. We'll be back next week. It'll just be me by myself, as Steve's taking a couple of weeks holiday. So until then, have a good day and catch you next week. Bye bye.